this video, I'll tell you why you shouldn't invest in Robo Advisors, but why we still do. Cha-ching! What's up everyone? Welcome back to another video with the Millennial Finance. Since we posted our first video on Robo Advisors about a year ago, we've been making many more videos on it and we've been telling all of y'all to invest your money in Robo Advisors. Today though, I'll be speaking about some of the dark sides about Robo-Advisors with regards to fees, your investments, and how much money you'll end up with after a few amount of years. But I'll also tell you guys why, despite all of this, I'm still invested in Robo-Advisors. No investments are perfect. When we're talking about stocks, what if we choose the wrong stocks? And if we're talking about ETFs, then yeah, sure, they're safer, but we can still choose the wrong ETFs. There can be tracking errors and we can still underperform the market, which is the S&P 500. Then there are robo-advisors. First of all, technically they're not really a different investment class. If you buy an ETF and then you invest in robo-advisors, you're not really diversified because they're all ETFs, but they do have their own unique pros and cons. So getting straight to it, why shouldn't you invest in robo-advisors? The first and one of the most important flaws about robo-advisors is that we're paying a fee that we don't necessarily have to. I'll be showing an example of Stashaway, but this is not unique to Stashaway because all robo-advisors have this same flaw. So first of all, to explain fees, we need to know that ETFs charge something that we call an expense ratio. All of these ETFs that we invest in are created and managed by fund managers like iShares, Vanguard, and SPDR. For performing the service of maintaining this ETF for you every single day, they charge us an expense ratio, and generally they're very low. When we look at the ETFs that Stashaway chose, we can see that the expense ratios range from all the way down at 0.03% to all the way up at 0.7%. On average though, Stashaway claims that the expense ratio of the ETFs are around 0.2%. This is something that we cannot run away from when buying ETFs. Technically, we can buy all the stocks of the ETF and then not pay any expense ratio, but that doesn't make sense because instead of just buying the S&P 500, we will have to buy the 500 different stocks and make sure we have the right allocation, so that doesn't make sense at all. We have to pay this expense. Fine. So just to clear some doubt, no, you do not have to pay anything to these fund managers. They will just deduct this in your returns. So because Stashaway invests our money in these ETFs, we will be charged in a way this expense ratio. But on top of this, Stashaway of course also has their own fee which ranges from 0.2% to 0.8%. Again, this is not limited to Stashaway. Wahid also charges around the same rate, and so does MyTheo and our crew. Other charges that Stashaway imposes on us include currency conversion fees, but I won't include this because technically for us to buy these US ETFs, we need to convert our Malaysian ringgit to US dollar anyway, and whatever method we use, there'll surely be some fees to it. However, since all Stashaway does is help us choose these ETFs, I can easily just set up a very aggressive portfolio in Stashaway, look at what ETFs they own and the allocation, then go to another broker and buy this by myself and completely bypass Stashaway, and I don't have to pay the 0.8% fees. This way, I only pay the expense ratio and I'll be saving money on fees. Don't we all like that? This especially makes sense for Wahid Invest because as we mentioned in our Wahid review, they only have 4 different investments, which means that it's very much easier for us to then copy this onto another broker. Compare this to apps like Stashaway and MyTheo. They have over 10 ETFs, I think, so it's a bit more work, but technically it's still possible. So you must be thinking, Stashaway, Wahid, they only charge me 0.8%. Why do I even care? I'll just pay, right? Well, I did some quick math. If you put 1,000 ringgit every month for 30 years, this fee itself will cost us over 100,000 ringgit. So yes, this fee is small, but just as we speak about how our investments can compound, the impact of these fees also compound, meaning the more we invest and the longer we invest in, the more of an impact these fees will have on our investment returns. Moving on to the second flaw of robo-advisors, being that we have no autonomy as to what our money is being invested in. So the entire concept behind robo-advisors can be a flaw as well. As an investor in Stashaway, I don't get to choose what they invest my money in, and I just have to trust them because they cannot just go out and buy an S&P 500 fund, because if they did that, then why would I use Stashaway in the first place? So they know that they need to provide some kind of value, whether it's less volatility or higher returns, and by doing that, they need to buy multiple different ETFs, and I need to trust them that their decisions are right. But yeah, I have no say as to what they invest my money in. For example, I set up a very aggressive portfolio in Stashaway that's the highest risk one, 36%, and they put an allocation in gold and REITs. What if I don't like gold and REITs? On Wahid, I also selected a very aggressive portfolio, and yet I still have a portion of my investments in Sukuk, which is essentially a bond. What if, in my personal view, an aggressive portfolio or a super aggressive portfolio should be just that? It should be very aggressive, and there should not be any allocation to commodities, to REITs, and to bonds. And maybe I want there to be crypto in it. I'm just joking, Stashaway and Wahid. It'll be completely irresponsible to put crypto into your portfolios. And the third and final flaw that I have against Robo Advisors is that we're unable to time the market. Now, admittedly, this is a relatively small con. We're not meant to time our investments, especially when we're talking about a long-term investment time frame and when we're investing in ETFs. However, because of the process that these robo-advisors employ, there is a slight flaw in terms of our returns when we're trying to withdraw or deposit. For example, let's say I have 1,000 ringgit invested into Stashaway, and today I submit a withdrawal request because I need this money out for a down payment on my Lamborghini. Even though I submitted the request today, I won't get my money immediately, of course. Stashaway tells me that they need 3 to 4 days to get this money into my bank account, so I patiently wait. But what many people do not know is that Stashaway also needs time to execute your sell orders. Maybe it takes 1 day, maybe it takes 2. So as of today, which is the day that I'm trying to submit my withdrawal, the value of my investments are 1,000 ringgit. But if the value of the investments that I have in Stashaway drops by the time Stashaway makes the sell order, then when the money reaches my bank account, it won't be 1,000 ringgit anymore. Maybe it'll be 950 ringgit. And in a way, I feel that I lost 50 ringgit and I'm angry at Stashaway. But to be honest, this is just their process. They need time to sell your order. So I consider this a flaw, but still it's just a small flaw in the grand scheme of things. It doesn't really matter. So to summarize the dark side about investing in robo-advisors that you may not know about, there are 3 main things. Firstly, there are fees that can be avoided. Second, we can't have any control about what or how they invest our money. And finally, we cannot really time the market. There may be some discrepancies by the time we withdraw and when the money reaches our bank account. However, having said all 3 of these things, I still invest in robo-advisors, and I still recommend most of my followers to do the same as well. Here's why. First of all, and the most important thing about these apps is that they have very low investment requirements. Not everyone has a lot of money to start investing, and even if they did, if this is their first time, maybe they don't feel comfortable putting a lot of money in. So the good thing is, most robo-advisors have a minimum investment of just 100 ringgit or even less, and even though the money that you deposit is so little, they still give you the diversification of multiple ETFs. They can do this because they pool money, not just yours, but every other investor that they have. They pool this money and they buy the necessary ETFs so that you can enjoy, in a way, fractional shares. So when I said earlier about a con where why would you use Stashaway and pay the 0.8% fees when you can just copy their exact ETFs and buy it on a broker like eToro? Well, the reason for that is because with 100 ringgit, I can get 10 ETFs on Stashaway, but I cannot do the same on eToro. So even though I'll be paying more in fees if I use Stashaway for the exact same portfolio, the access that it gives new investors with less money or those who just want to try things out is invaluable, and this is something that cannot be replaced. Secondly, ETFs and, in a way, unemotional investing should be at the core of our portfolios. I believe that most investors out there, Even though you may be very experienced, we should always have a certain segment of our portfolios in ETFs as some sort of base. I talk a lot about individual stocks, about my Malaysian stocks, about my US stocks, but the truth is, I don't even have decades of experience to tell me that I'm good at doing this. For all I know, I could suck at picking stocks. It's just that over the last few years, I've been lucky, but over the long term, I'm going to drastically underperform the stock market. Now, I don't want to wake up one day 50 years old and realizing I actually made huge mistakes in my portfolio, and because of that, I'm never going to retire and I'm never going to have my Lamborghinis. And that's why I use Stashaway, because ETFs are generally safer, they're more stable, and they act as a core to my portfolio. To me, I also view it as sort of a safer investment, but I don't know how safe it is because I always choose the super aggressive portfolio. I don't have to think about rebalancing my portfolio or choosing the right stocks for ETFs. Everything is super automated. I set up my weekly deposits. It just goes on autopilot and I don't even have to think about anything at all. This way, I do have a portion of my portfolio in individual stocks where I'm trying to outperform the market, but at least if this fails, I still have the other side of my portfolio, which are in Robo Advisors, that can help counteract it and sort of at least give me that security of financial independence. And the final reason why I think that most people should still use Robo Advisors is because they help with people who have little knowledge to investing. A lot of people are deterred from investing. They don't want to do it because they think that they need a lot of knowledge and they just don't have the time or interest to do it. And that's the truth. In managing my own individual stock portfolio, I do a lot of research. I keep up with news. I always look at the charts, and I know many people don't want to do it, and that's completely fine. But the important thing is, for those people who don't want to learn about investing or reading financial statements, at least they now have an avenue to actually start investing. As we all know, investing your money is better than putting it in a savings account. Earlier, I told you that the fees that these Robo-Advisors charges over the span of 30 years can cost us over 100,000 ringgit. What I didn't say is that because we're still investing our money anyway, it actually generated us returns in excess of 700,000 ringgit. Who wouldn't pay 100,000 ringgit to get an extra 700,000? I have a lot of friends who tell me that they have no interest in investing. They don't know how to read about financial statements. They don't want to learn. They can't be bothered, but they're still investing because of the existence of this Robo Advisors, and they find it very helpful. Even though I do the research on my stocks, I don't look down on people who don't want to do it, and I'm happy that now they actually have the opportunity to invest easily. So yes, Robo Advisors do have their flaws, but overall, their existence is much better for investors as a whole. They allow people with little money or little knowledge to actually start investing when they previously couldn't. If you're very interested in investing and have a lot of time to do research and you think that you can outperform these Robo-Advisors and that the fees are too high, then by all means you can always do it yourself. Robo-Advisors, after all, are meant for a certain target market, and trust me, this market is huge. We can't say that just because I know how to do things better, Robo-Advisors suck and their fees are too high and they're scaring people out of money. To a lot of my friends, even family, I recommend them to not even think about stocks yet and just try out Robo-Advisors first. If you're interested in trying out Stashaway or Why Invest, you can use our links down in the description below so that you can get some nice freebies, and so will we. Thanks for watching this video till the end. Give us 2 big thumbs up. Wait, no, if you click it twice, you will unlike it. 1 big thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.